Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at Ewha at the Catholic University of Korea. Sorry, Professor Yang. Good to have you back on.
Happy to be here.
Well, stocks in New York closed Friday with a nice gain for the week on hopes for the economic recovery and corporate earnings. It was the fourth weekly gain in a row for the S&P. What's the story in the global markets?
Okay, well, the U.S. market actually had a very good week last week. On Friday, Dow hit a record closing high, and S&P hit a intraday high, though the closing wasn't the highest that they had. It's attributed to better-than-expected retail sale numbers. It went up by more than 10%, and the lowest number of new unemployment applicants since the coronavirus started at 576,000. And vaccination is going faster than everyone expected, and the number of infected is becoming reduced. So there is a lot of optimism in the United States about the end of coronavirus, and the stock market is reflecting that. The futures for the American markets are up today, so it's expected to continue its upper path for at least in the near future, though the investors are still concerned about possible inflation. European market, it seems to be following the U.S. upwards. Asia, on the other hand, it does not seem to be following U.S. Japan's Nikkei index was flat last week, though it's up by about 1.7% today. Shanghai was down most of the last week, but it went up on Friday, and today it was up about 1%. And Hang Seng of Hong Kong was up most of last week at about 0.6%, rising today.
And today in Korea, the main index, the KOSPI, broke through 3,200 points, but closing just 1 point shy of that mark. Another gain on the KOSDAQ, though, holding at above 1,000 points. What's happening in the domestic markets, and what do you see ahead this week?
Okay, well, both KOSPI and KOSDAQ had an interesting day. It started out very strong. Then, for some reason, around mid-afternoon, it fell. It rose again, but it was just not able to recover the highs that they had at the early afternoon. So KOSPI, it broke 3,200 for most of the day, but ended today at 3,198.84. But this is very close to record-high closing numbers. Foreigners and institutions sold, individuals bought. KOSDAQ ended today at 1,029.46. It was up 0.77% today. Individuals sold, foreigners and institutions bought.
Now, if we could turn to a question in the business world here in Korea, we're coming up against an interesting regulatory question when it comes to big business. Later this month, the Fair Trade Commission will update its list of companies that fall under rules meant to prevent abuses by the biggest companies, the powerful family-run chaebols. But interestingly, innovative companies like the retail giant Coupang, relatively new on the scene, definitely not a chaebol, could find themselves subject to these rules because they've grown so fast. So they're arguably not the target of these rules, and the concern is it could hinder their growth. So tell us about the situation, Professor, and what you make of it.
Okay, well, this points out this really strange paradox about Korean economy, basically the chaebol system. Now, in other countries, you have, if you're looking for somebody who's responsible for the company or the conglomerates, you seek out the CEO or the largest stockholders or the chairman of the board. But in Korea, these people are not necessarily in charge. So even if the company is a stock issuing company, the largest stockholder may actually not have as much power as the informal head of the family who runs the chaebol. And this Fair Trade Commission regulation, which assigns one person as the de facto head of conglomerate, it tries to recognize that cultural factors through law, but it's not working too well. Now, the Coupang, it became one of the largest companies subject to this regulation because it had a very successful market offering in the United States. Because they were so successful, they just became one of the highest capitalized company in Korea, which made them subject to this regulation. But this isn't the first time that this problem came up. The Naver Group, another computer group, had a similar problem around 2017 when the FTC wanted the chairman to become the de facto head of the conglomerate, even though he didn't want to, and Naver is not a chaebol group. It does not have too many affiliates spread around all different companies, and their corporate command structure is actually fairly transparent, unlike a lot of chaebols. And then another problem came up with the Hanjin Group, the Korean Air Group, when the former head of the group died, Cho Yang-ho, and Jo Won-tae became the next chairman. There was a family fight over who will take control of the company between the son, Jo Won-tae, and the oldest daughter, Jo Hyun-ah, and that caused problems on deciding who the FTC should consider as the head of the company. But basically, these type of problems do show that the Korean chaebol system is not exactly a normal capitalist system. It's a weird melange of family company and a legal corporation, and I think the law is hitting the limits of where it could go. We should definitely re-examine how we decide head of the group, and depending on how we decide what the head of group will be, it will have vast consequences on corporate governance as well as investment from abroad and even domestic investment.
It's a fascinating discussion. I'm sure that will continue long into the future. Professor, finally, a report from the Korea Economic Research Institute suggests that last year around 72,000 manufacturing jobs in Korea were moved overseas. And if they had stayed here, that would have boosted the employment rate by about 0.3%. Tell us about that and what might be done to attract the kind of investment that would keep jobs in the country.
Okay, well, the Korea Economic Research Institute, KERI, argues that the reason that Korea lost these many jobs overseas was that Korea had a very tough, very expensive regulations, especially concerning labor. So more Korean firms are locating abroad, and less investments coming from abroad, coming from foreigners, which as a result means less jobs for Korea, especially in the manufacturing sector. I personally agree with what they're arguing, but I'm not sure if the report, the numbers itself reflect that. The KERI got these numbers by looking at the difference between foreign direct investment and overseas direct investment, how much investment is coming in and how much investment is going out. And at least according to KERI, the largest sectors where the jobs were lost was electric equipment, where they lost about 15,000 workers, and automobiles, where they lost about 14,000 workers. But the total number of manufacturing jobs in Korea is about 4.4 million, and the total number of workers is close to 27 million. So 75,000 workers, it's not a whole lot. As they mentioned, it's only about 0.3% difference for the unemployment rate. And there are reasons why you may want to invest abroad, even if the domestic investment environment is very good. For example, you may want to evade trade barriers. You may want to get closer to the consumer market. You may want to compete with higher technology firms that are located abroad, because that will give you more opportunities to gain technology as well. So I think they're making a correct argument, but I'm not quite sure if the numbers that they cite is very relevant to the case they're making.
Well, Professor, we appreciate your insights on that subject and everything else we discussed today. Thanks so much for joining us, as always.
Thank you.